Good morning from our global headquarters in New York. I'm Danny Berger. Manish Cranny is off for the week. Welcome to Bloomberg Brief. Let's set your agenda. Airplanes grounded, banking systems down. Microsoft and CrowdStrike outages disrupt businesses across industries around the world. President Biden faces more pressure to drop his bid for a second term. Former President Trump officially accepts his nomination as the Republican candidate. And Netflix stays at the helm. The streaming service adds 8 million new customers, beating the Street's estimates and its rival. What a morning. It is the summer. It is Friday. It is supposed to be boring, but we have a new thing to contend with. That is an outage seemingly stemming from CrowdStrike and Microsoft putting things down across the world. It is affecting risk appetite, down 0.2 for your S&P futures session. It fell precipitously as soon as we started getting headlines, things like airlines, banks, even some systems around the world for things like 911 services and some fire alarm in Copenhagen are having issues. We're going to talk to our reporter about that in just a moment. Let me quickly whip through the rest of these markets. Tech doing the worst, as you'd assume, with things like Microsoft and CrowdStrike down a whole lot this morning. Meanwhile, your U.S. 10-year yield, not a lot of movement. So despite the concern, no really haven bid. We're at 4.19%. Let me show you CrowdStrike, Microsoft, and United. United not falling too much. Maybe there's an idea that hopefully flights can get back up and running soon. That's down by about 0.25%. Microsoft down 2.5%. CrowdStrike down more than 14%. So let's dive straight into this. It is a fast developing story. And Bloomberg Sam Unstead is with us for our Markets Today blog, who's been tracking everything that seems to be going wrong across the world. Sam, can you just start? Do we know sort of what's behind this, how this really got going?
So I think actually this is something you're going to see over the course of the next couple of hours and maybe over the next couple of days, Danny, is that most of this has come from an update that was put through by CrowdStrike, which is a cybersecurity company. And what that's done is impact Microsoft's 365 services and their Azure cloud service. And this is one of the major providers in the world. So that having any kind of issue at all has very widespread impact. And then what we've seen over the course of the morning is just consistent headlines, particularly from the airline industry. So that's been really the main area where this has happened. And that's partly as well because the airline industry, obviously safety is enormously important there. So any kind of disruption, they have to take action very, very quickly. That's where you've seen the majority of the impact. Plus, as you've already mentioned there, Danny, on CrowdStrike shares, which are dropping quite a bit.
Yeah, I mean, one consultant for the airline industry told me that at Heathrow, literally no one could log into their computers on the British Airways team. So that's obviously a problem. Airlines are one of it, but what about the extent of the rest of this outage, Sam? What do we know?
Well, I mean, at the moment, we're still waiting. They are working on it. They've both confirmed that they are working to reverse the update that was put through in order to get systems back online again. So until that happens, we won't sort of have a really good indication of how much of an impact this will have going forward, because obviously the longer it goes on, the worse it becomes. You know, for CrowdStrike in particular, the reputational risk here is quite significant. If you're a security company of any kind, a cybersecurity company in this case, it's very important that your reputation is very, very good. And the other thing to remember as well is with cybersecurity systems, they go very deep into the stack. So if you're going to have a security system, it has to protect everything. So when they do go wrong, which is very rare, but when they do, it can have an enormous impact.
Yeah, this headline just coming from a spokesperson from Microsoft, Sam. Microsoft anticipates resolution is forthcoming. Let's hope things get back up and running soon. Sam, you're kind of touching on this, but the fact that this is just one company, it is CrowdStrike, it affects Microsoft, it affects the globe. What do you think this means for a global security supply chain? Some of these companies going to start to rethink things?
I think there's a possibility of that. I mean, as I say, part of it really is about how quickly it gets resolved, and that reputational risk is very significant. There is an element of this that's about the kind of concentration of supply chains. You know, the cloud industry is another where there's a high concentration to a very small number of very, very large companies. So when these things do go wrong, as we're seeing today, it has a kind of wave effect into all sorts of different industries. You know, we've mentioned airlines, but you're seeing an impact, for example, going into then cyber insurance companies because they might face some risk from this. McDonald's Japan had to shut down a bunch of their systems. There's payment systems having issues sort of all over the place. So it can have quite a long-running issue. In terms of the stock market going forward, you know, from this, airlines, you know, as that kind of shakes itself out, that's where you may see a bit more of an impact as we go. But likelihood is once it's done, it'll take a few days, if not weeks, to sort it all out and then to understand the kind of financial impact.
I'm happy to report, Sam, because Sky News in the UK, where you are, literally couldn't go on air. They're now back on air, so things may be starting to normalize. Sam Unstead, thank you so much. Be sure to keep following Sam and the rest of our global team. They are doing such a good job covering this outage. TLIV Go is where you want to head on your terminal. Joining us now is Elliot Hentov, head of macro policy research at State Street. Elliot, great to speak with you this morning. I just saw a headline that some JP Morgan employees couldn't log on. Can we just set this straight? Were you able to log on this morning okay?
I am logged on right now.
Okay, perfect. State Street is up and running. We love to hear that, Elliot. Listen, this comes at a time where there is this sense of fragility right now in these markets. The last sell-off that's happened over the past few days, it's happened everything from politics to maybe rethinking this economy. What do you make of having, again, an outage, which usually we wouldn't really think too much of, but this is a global outage affecting global industry. How does it shape your thinking this morning?
Surprisingly, it does. Well, the first thing what we want to rule out is that there was nothing nefarious. If indeed there was some nefarious element to the software update by an external actor, I think that would be very disruptive for a lot of the equity market more broadly, because it's been built on a tech rally. And if we have some existential vulnerability, that would be a major problem. The second big issue is what Sam alluded to, which is if it undermines confidence in cloud and server ability to run future businesses, to run AI models of the future, all the productivity growth that we're expecting could be slowed down because suddenly there'll be hesitation around onboarding reliance on these cloud systems.
That is such a good point, Elliot, because we are in this moment where basically every company is talking about trying to incorporate AI, some more successful than others. I know McDonald's shut down their AI ordering service, drive-through service, because people were getting things like bacon on top of their ice cream. But in this world where we're all moving towards AI, I wonder if it's almost, if we're getting ahead of ourselves, if this sort of incident shows us that our reliance on some of this technology can be an issue, especially when we're all relying on the same company, because that is happening in AI with all these companies relying, for example, on NVIDIA chips.
Yeah, I think the scary thing about the AI revolution from a macro and from a kind of systemic risk point of view is that it's the first time where the incumbents are at an advantage. So structurally, as you say, you have a real concentration of supply, and incumbents are basically being boosted by the innovation cycle. And so that means it reinforces and exacerbates systemic risk and concentration risk. And I think that topic will emerge more and more in the future.
For those of you just joining us, we're covering now a live story of outages stemming from CrowdStrike, various things like airlines having issues, some banks as well. We're speaking this morning to State Street. Elliot, the other big development that, look, if this hadn't have happened, you know what you and I probably would have been talking about all morning. It is the politics. We had former President Trump solidified as the Republican nominee last night at the convention. Now, a lot of people, as it affects this market, has been trading as the main impact will be more deficit, will be higher deficits. And that's been things like curve steepening has been impacted from that. How much do you want to be part of that trade? How much do you see a Republican presidency and the likelihood of it affecting what you're recommending to clients?
Obviously, for the second half of this year, it is going to be a major driver because obviously anything that affects the U.S. policy mix will be key to U.S. bond markets, reserve currency, reference rates, and so forth. So it's for good reason we're all talking about it. For good reason we have to get it right. And the election risk these days is not less about the presidency, but really about whether the Congress will be Republican, both houses, yes or no. Because that means you get that fiscal expansion. That means you also get that yield curve steepening, particularly with long-term yields rising on account of deficit worries. But that outcome is not certain yet. It's much less certain and much less likely than the presidential race. And there's still a lot of factors that could drive it. I would really flag here that when you take the presidential race out and look at congressional polling, it still is a very, very close race. And so therefore, getting that right is the challenge.
It's interesting because with the added pressure that Biden faced over the past 24 hours, you had this market kind of undo some of that rotationary trade. I wonder if there's some element where you look at Biden dropping out and you say, okay, this changes the races down ballot and maybe makes it more likely, or at least helps Democrats a little bit, and therefore changes some of what you're talking about. In other words, Elliot, how closely are you following this specific development for getting an understanding of how the fiscal position might evolve?
100%. It's down to the minutia of election forecasting, because congressional results are linked to presidential race by a factor via the turnout, who basically shows up at the ballot box. And so the top of the ticket matters in terms of the trickle down. And so it matters a lot. And if Biden does exit, that does reset and rechange the probabilities of the Democrats actually retaking the House. I would actually say any other candidate other than Biden lifts the Democrats to a 50% chance of taking the House at least, and therefore reduces the odds of the fiscal expansion and the pretty radical yield curve steepening that some of the market is gradually rotating into right now.
Elliot, really wonderful to have you on this morning. We're happy to hear that everything is going smoothly. Hopefully you have no flights to catch. Elliot Hentov of State Street. Enjoy your weekend. Okay, let's get to some of the other top stories that are trending on the terminal this morning. We have to talk about Netflix. Shares are falling in the pre-market after the streaming video giant's third quarter revenue was slightly weaker than forecast. But analysts were largely positive on the print. It did show strong subscriber additions. Netflix shares were up 32% this year going into the report, so maybe just high expectations. Chinese investors sold a record amount of U.S. stocks and bonds in May. Funds offloaded a net $42.6 billion worth of long-term securities, consisting of treasuries, agency and corporate bonds and equities, according to U.S. Treasury data. Yemen's Houthi militants claimed responsibility after one man was killed in the heart of Tel Aviv after an explosion from a suspected drone on Friday morning. The Iran-backed group said it attacked Israel's commercial and vowed to target the city and other parts of the country again. Okay, coming up, a tale of two parties. The GOP all unites around Trump as he accepts the nomination, while the Biden campaign hits an all-time high. Later in the hour, we're also going to speak to BlackRock's Amanda Lynam. We'll speak about a lot of things, but also this outage that we're seeing across IT systems. We'll keep you up to date with it as it happens on your brief. It's your Bloomberg Brief. I'm Danny Berger. We are currently tracking the IT outage taking place across industry, across the globe. Just to get you up to speed, it's reportedly started with an update for CrowdStrike that also caused issues for Microsoft's cloud Azure service, which lots of people use. So those shares down 17.5% for CrowdStrike. Will this make people rethink all using the same cyber security software? Microsoft down 2%. Also impacting airlines, Cathay Pacific, Delta, United, American Air, all affected. Some of them grounded. However, American Airlines has canceled that order to ground flights, according to the FAA. There are also some issues for banks, and LSE reported systems, a London Stock Exchange, earlier this morning, but they are up and running again. Of course, all these disruptions come to a very busy weekend for the July travel holiday. Let's take a look at some of those European stocks, because again, some of the first issues did affect Europe. Globally, I will say it is risk off following on from yesterday. There's Ryanair also saying that they had issues with their systems, down 1.6%. The latest we've heard from Microsoft is they have said that a resolution is, quote, forthcoming. Also hearing from JP Morgan that some of their employees are having a hard time logging in. So that's the state of that global tech outage. Let's now turn to D.C. President Biden's campaign is at the lowest it has ever been, with even more calls to step down from the presidential race. That includes former President Obama, who has joined with concerns about his bid, according to people familiar. Let's get over to Bloomberg's Stephanie Baker. Stephanie, I mean, we talked earlier this week and we said the dam is breaking. Surely the dam is breaking now.
It certainly looks like it. I think Biden's COVID diagnosis has complicated things. I think the Republican convention and the incredible enthusiasm and unity behind Trump may have sped up those calls on Biden to step aside. All bets are off. It's unclear whether or not he might step aside as soon as this weekend or early next week. But the fact of the matter is the Democrats are running out of time. They need to make a decision if they are going to change candidates as soon as possible, so those roll call votes that were due to start on August 1st can go ahead.
And Stephanie, it is really stark, this split screen that America is getting right now. On one side, you have the leaks and the disarray coming from the Democratic Party. On the other hand, you have the Republican Party. And the convention happening there is Trump, sort of the king, coming back to the stage, former President Trump officially accepting the nomination. Let's just take a listen from the RNC yesterday.
There is no victory in winning for half of America. So tonight, with faith and devotion, I proudly accept your nomination for President of the United States.
Stephanie, the language from Team Trump had been that he would change his language, that this was a different type of address after he survived Saturday's assassination attempt. Did we get a different Trump this time?
It started out as a different Trump. He was sounding presidential, restrained, focused on unity, and then he veered off script and started rambling about attacks on former House Speaker Nancy Pelosi, calling her crazy Nancy, talking in very dark terms about an immigrant invasion, talking about the U.S. in economic decline, which is patently false. So he did not stick to the script. It was a rambling speech. It went on the longest nomination acceptance speech, I think, in U.S. history. I think some people in the audience I read were getting restless and bored. It's unfortunate he did not stick to that sort of presidential tone at the beginning. And I think it indicates he probably will continue to veer off script with these attacks going forward.
Stephanie, thank you so much. That is Bloomberg's Stephanie Baker. Now, coming up, we're going to get back to the outages, the latest, more airlines reporting issues. Spirit Airline has now grounded all flights. NHS England says it is aware of global IT issues. We're going to break it all down for you next on your brief. We are tracking a major outage across global industry this morning. It seems to have started with an update to CrowdStrike software. It's impacting most notably Microsoft Azure, their cloud business. CrowdStrike down 20%, Microsoft down 2.5%. Various industries reporting problems, from JP Morgan, where some employees can't log in, to different banks and airlines too. Let's focus in on the airline portion of this, because this is one of the busiest weekends for traveling. Bloomberg's Guy Johnson joins us now. Guy, you've been tracking this all morning. I just want to get a sense from you where we stand in the extent of the issues, IT issues, that airlines are facing.
It is huge and it is significant, Danny. It started in Asia overnight. We saw problems with check-in in Hong Kong. We've seen some airlines in Australia being affected. It's migrated itself through into Asia. We've got a number of European carriers being affected. Wizz is talking about issues that it is facing. We've got some of the other low-cost carriers. We've got some of the airports as well. Heathrow is running a reduced system. We saw Berlin's airport being closed a little earlier on. One of the first things we did see, though, when I got in this morning was US carriers issuing ground stop. This basically just means that we are seeing all departures and arrivals, all basically sort of ground movements of the aircraft coming to a complete full stop. Now, American has subsequently lifted that, but we don't know what else the effect is going to be throughout this morning and how long this ultimately is going to last. I've never seen anything quite like this, Danny, in terms of the global impact that we see on airlines. And this is a hugely connected industry, and it's going to take a long time potentially to resolve. And the longer it goes on, the longer the effect will be, because you get aircraft out of position, you get pilots, you get crew out of position. And the effect of that, plus the kind of the build-up, the backlog of people that haven't already traveled, having a huge effect. So we may be almost kind of at the point where we are going to see a lasting effect from this, even if it was resolved right now. But it hasn't been yet.
And of course, Guy, this is impacting more than just airlines. I want to bring in Tom Metcalf to get the view from banks. So let's broaden out this conversation. Tom, I mentioned how JP Morgan, some employees couldn't log in, but of course there are other IT systems at issue here for the big banks, for various financial services. What has been the impact?
Yeah, basically, if you're reliant on Microsoft, you're going to be hit in some way. So, some banks who for some reason don't have Microsoft exposure, as it were, are operating just fine. But right across the spectrum of finance, we're seeing issues. So, some of the pricing was delayed. We're hearing some trades can't go through. And yeah, broadly speaking, it's been a sort of very disrupted Friday morning of trading.
It certainly has. Guy, can you give us an idea? Again, as Tom was saying, basically anyone that uses Microsoft has an issue. Where do we stand on those sort of upgrades for airlines and the software they use? Because I was under the impression that a lot of these airlines actually use old software and maybe could get around things like this.
Well, I think the old software is the sort of the pen and paper that we're relying on this morning. Maybe that's where we're back to this morning, because some airlines are literally having to check in that fashion. Yeah, you're right, Danny. This is an industry that has legacy IT systems that date back years and years and years, and they have been racing over the last few years to play catch up. And now it's not all of the systems that have caught up, but clearly some of them have and have been migrated to the cloud. Now, this may be check-in systems, this may be payment systems, and we're certainly hearing a lot about payment systems this morning to draw a line to what Tom is talking about. So it may not be the entire IT suite that is being affected, but key portions of it are, and those are kind of important, and that's what's grinding the whole system to a halt.
Okay, Guy, Tom, thank you so much for those updates. That is Bloomberg's Guy Johnson and Tom Metcalf. I would really recommend going to our Top Live blog on this. They're doing a great job keeping everyone up to date. TLIV Go is where you can see that. Now, coming up, we're going to speak to BlackRock's Amanda Lynam. Hopefully she's been able to log on this morning. That's coming up on your brief. From our global headquarters in New York, I'm Danny Berger. Manish Cranny is off this week. Let's set your agenda. Airplanes grounded, banking systems down, Microsoft and CrowdStrike outages disrupt businesses across industries around the world. President Biden faces more pressure to drop his bid for a second term. Former President Trump officially accepts his nomination as the Republican candidate. And Netflix stays at the helm. The streaming service adds 8 million new customers, beating the street's estimates and its rivals. The top story, no doubt, is the IT outage this morning. What we know at this moment is it seems to have started with an update from CrowdStrike that has specifically impacted Microsoft's Azure. They have released a fix, a workaround, apparently, that they can do, but it's kind of an old school thing that you need to do. So it is risk off across these markets. Here's the individual impact. CrowdStrike, that is down some 20%. Microsoft down 3%. United Air, which many of the airlines have had ground halts. American apparently just lifted theirs. That is down 0.25%. I want to get straight to our reporter, Sam Unstead, on our live blog team who's been tracking all the outages. Sam, just give us this moment in time. What is the update at this moment?
So I think where we are now, Danny, is the key issue and where it's sort of moving more and more is towards CrowdStrike. So what we know is that CrowdStrike released an update to part of their software that's used in Microsoft 365 and Microsoft Azure, which is their cloud business. Microsoft, one of the biggest cloud providers in the world by quite a distance. There's quite a concentrated market. And what you're now seeing is that the focus is going more and more onto CrowdStrike. So you said just there, they're down 20%. That's dipped quite significantly further over the course of the last half hour or so. And what you've got as well for them in particular is a major reputational risk. And I think that's why you're starting to see them go further and further lower the longer and longer this continues.
And I mentioned a little bit about the cause, that it seems to have started with a CrowdStrike update. But that cause, Sam, what does it tell us about the fragility of this moment that we're currently in?
Well, I think, so in this sense, so the cloud market, like a couple of sort of major IT markets, it's enormously important. It's enormously important to the way that IT systems work globally. And it is very concentrated. There are only a couple of very, very major providers, Microsoft being one of them. So when something does go wrong here, it can have, a really significant effect. You mentioned, Danny, airlines. Actually, as I was leaving my desk, there's a couple of headlines coming through saying that some of the issues are starting to be resolved or certainly easing. Doesn't necessarily mean that it's going to change enormously, but it's sort of going in the right direction. I think for the rest of the picture, it's all about that concentration risk there. And then another thing to note as well is with the cybersecurity software and security software generally, it goes very deep into the stack. And so although these things are very rare, when they do go wrong, it has a huge impact across the whole system. And so Microsoft, as I say, one of the biggest providers there is, 365, one of the most used software systems in the world. that going down obviously has an enormous impact globally.
Yeah, again, it's just the breadth of different companies that are impacted that is quite striking. I should note for any of our viewers waking up in Washington, D.C., the D.C. Metro is reporting that they are having issues with their system. So, Sam, I hope you're not traveling anywhere. I hope the tube is up and running and you're all safe. Bloomberg Sam Unstead, thank you so much for that. Be sure to keep following Sam and our global team of reporters covering this. T-Live is where you want to go on your terminal, a great live blog up and running, keeping you up to date with all the latest. Joining us now is Amanda Lynam, head of macro credit research at BlackRock. Amanda, have you tried to log in this morning? Is everything okay?
Everything's okay, but thankfully I'm in person, so thank you for having me.
Good. I mean, JP Morgan, apparently some employees are having a hard time logging in. But again, it just shows the breadth of different companies that are really struggling. I mean, how does it sort of impact your view this morning?
Yeah, the first thing that I thought of when I woke up and saw this was Chair Powell and President Lagarde's comments at the ECB forum in Sintra a couple of weeks ago, where they commented that the one thing that keeps them up at night was cybersecurity risk. And I think this underscores a theme that we've been focused on over the past few years, which is supply chain resilience, supply chain disruptions. In the context of the past few years, we've been thinking about that in terms of shipping goods across international waters, U.S.-China trade tensions from 2018, 2019. But now it kind of takes on a new meaning. And I suppose that makes sense, given kind of the prevalence of technology and a lot of these products. A lot of companies are tech companies as well as their core product. And so I believe it's something that we're going to need to focus on for a long time.
Right. To the point of Sintra and that central bank comment, our reporters are now writing that Norway has said that it's going to conduct its banking system liquidity auction via email and over the phone today. So, I mean, again, it does speak to this concentration risk. Yes. And as this world, as you're pointing to, becomes more tech enabled, as everybody really wants the chips from the same person, is this a moment to kind of step back and say, something's not right here, something's not working with those supply chains?
Well, I think corporates have been focused on that point for a while. We've seen them kind of try to build in more resilience. We've had this kind of ongoing trend of nearshoring, onshoring over the past few years. I think that's also been a catalyst, actually, of some of the strategic M&A that we saw coming out of the pandemic, where the pandemic and kind of the sudden stop in the economy shined a light in some businesses on gaps, whether that was diversification or resilience in the supply chain. So I do think that's something that we will be paying attention to. It underscores this point that this is a very idiosyncratic market. There are a lot of macro headwinds and tailwinds that we're watching, but at the end of the day, it's how companies can navigate a higher cost of capital environment, how companies can deal with inflationary pressures on the business, how companies are dealing with supply chain disruptions. Yeah. And so I think really kind of that focus on, in our market of corporate credit, granular credit selection. We're no longer in a rising tide lifts all boats market for the macro, nor can we kind of treat all companies the same in terms of idiosyncratic resilience.
Does this moment speak also to the fragility of not our IT systems, but of this market in general? I mean, the hits keep on coming. We were rallying up, doing record after record. Risk assets were on fire. And it took politics and now some cybersecurity risks to really shake things up.
Right. I think in credit, though, we'll see how we kind of trade through the rest of the day.
Quite resilient.
Credit has been very resilient, and I think there's this tug of war that's happening in the credit market between fundamentals, which would encompass some of the headwinds that you're mentioning, and technicals, which is yield-based demand coming into corporate credit. And I think, as we've talked about before, sometimes the credit market tries to sell off, and it actually can't sell off in a sustained way because actually demand comes in from folks on the sidelines. So I think for there to be widespread disruption in the credit market, leaving this event aside, I think what you would actually need to see is kind of a broad-based disruption in capital markets availability and capital markets access. That, beyond some of the macro tail risks, that's what we're watching in terms of the big risks to credit markets. Can lower-rated issuers continue to access the capital markets even at a higher cost? So long as they can do that, I think it's hard to kind of shake things up too much in the credit market, at least as it relates to lower-rated firms' availability to kind of manage through this cycle. Of course, issues like this, significant shifts in policy, maybe later this year, we're watching very closely.
I mean, but again, nothing really seems to have moved these credit markets through this. And to your point, it has to do with the demand. But demand for what? I mean, the type of issuances we're seeing are really refinancing. There's not a lot of new things coming to the market. So what do you make of sort of the health of those underlying fundamentals of credit markets?
Right. So there are a few things that have been moving the market in kind of short episodes. One was in late 2023 when we had what felt like a disorderly move in the Treasury market. That was enough to, I think, cause some investors to take a step back and say, is this actually the time to deploy? We've calmed down since then. Capital markets, I would say, inactive accessibility in late 2023. That's been enough to kind of add some pressure. And then idiosyncratic stories. We've seen, I'd say, a theme of over-levered capital structures that were kept afloat by a low-rate environment, really struggling in this market, and which is notable because we've been in an above-trend growth environment. I think the underlying health is actually quite strong. There are corporates that are on the margin of vulnerability, again, who are struggling to kind of sustain their capital structures. In general, though, corporates were proactive in pre-funding, raising liquidity, so they're in a pretty good spot. Do we read a lot from the fact that most of the debt has been refinancing related? I would actually view that as a positive for fundamentals, right? If you have corporates that in high yield, for example, are targeting in some instances late 2025 and early 26 maturities, to me that removes some of the refinancing risks. So I view that as a positive, but we acknowledge that's been keeping spreads, I think, anchored.
Well, for that refinancing risk, and I definitely acknowledge that it's not the majority of companies that necessarily have this, but for those that are in trouble at the moment, if we do have a shallower cutting cycle, that it's just 2, 3, it's not your classic cutting cycle, what difference will that make?
I think it makes a big difference because, one, we shouldn't be expecting near-term significant interest rate relief on corporates' ability to refinance at a lower cost, right? So we would expect them to navigate a higher cost of capital environment. I believe that we will have a shallow, gradual rate cutting cycle. We are not expecting a significant deep cutting cycle. It's not clear to me what the urgency is from the Fed to do that. And even John Williams earlier this week said it's really about adjusting the degree of restriction, not really easing below the neutral rate, which it remains elusive, right? We don't know what that is. I think oftentimes folks will say, well, high yield credit, for example, doesn't do well in a cutting cycle, but usually that cutting cycle is because growth is deteriorating. So in this environment, if actually growth holds up and the Fed is just adjusting policy because inflation is hopefully cooperating, that's a much more benign outcome for corporate credit relative to a cutting cycle in response to a sharp downturn in growth or deterioration in the labor market. It matters a lot. But what that also does is it places the emphasis on growth to allow companies to keep their margins stable and profit solid to navigate through that higher cost of capital. So in our view, we need at least trend or ideally above trend growth if we are to experience a gradual rate cutting cycle.
Well, to the idea that you started with, that you kind of have to be picky in this environment because growth has been holding up, but there are flecks of concerns. The airlines reporting being one of them. Delta and United both talking about issues, not IT issues, that's this morning, but earlier this week, talking about issues of there not really being enough demand, and they have a lot of empty seats. Domino's Pizza, some of these, smaller or maybe lower income type consumer focused companies. So how big does that need to get before it's a more alarming crack? Or are you saying now it's just really focused in on certain industries?
Well, I think the point you raise is an excellent one, which is there's this common thread of bifurcation across the consumer. So lower end consumers we know have really been under pressure because they're net borrowers in this economy, whereas higher end consumers are asset owners and have benefited to some degree in house price appreciation, equity market appreciation. And so it does matter where the companies are focused in terms of what type of customer, what category, what channel. I think in order for it to be a broad-based concern about the consumer, we would really need to see, as Chair Powell said, kind of unexpected weakening in the labor market. We would need to see, I would see, a real weakening in kind of corporate profits such that they turn to kind of headcount reductions to save margins. I don't believe that's not our base case. But I do think this dispersion in the consumer is something that will be with us. It's always existed, but it's actually more pronounced, we believe, in this cycle and matters more in this cycle because of the reasons we mentioned. Because if you're a net borrower, you actually are feeling ongoing pressure, where if you're an asset owner in a period where house prices are up 49% since 2019, you've benefited quite substantially.
Absolutely. It was really wonderful to talk with you, Amanda. Amanda Lynam, hopefully you're not traveling anywhere. Hopefully you can stay put and everything's good. Amanda Lynam of BlackRock. Okay, coming up, shares of Swedish aerospace and defense SAAB getting hit this morning after reporting earnings. We're going to speak to the CEO next on Bloomberg Brief. We are tracking a global IT outage for you that stems from CrowdStrike, a software update that has specifically hit Microsoft Azure. So a lot of systems that are using them are unable or at least struggling to operate this morning, maybe going back to pen and paper with the case of Norway and their central bank for liquidity operations. CrowdStrike is down some 19.5%. Just some of the other headlines we're tracking. According to the AFP, the Olympics Committee says global IT issues are affecting it. The Washington, D.C. Metro this morning is impacted. Many airlines are halting ground flights, have a ground operation on. American Air just lifted theirs. It's not clear if they are up and back in the sky, but it is airlines, it is banks, a lot of different industry. Now, let's turn to earnings this morning. The Swedish aero and defense company SAAB had hit a fresh record this morning, a touch off of that after reporting earnings. Joining us now is the CEO, Micael Johansson. Micael, thanks for joining us this morning. I do want to get to your earnings, but I have to start with this IT outage, considering it has to do with cybersecurity software. And as a defense company, obviously, this is something you're acutely aware of and keeping track of. I just want to start this. Is it impacting your systems at all this morning?
We're looking into it, but so far we haven't seen an effect at all. But of course, we take this seriously and we are continuously monitoring. But I don't have any details. I haven't seen anything that has affected us yet.
How do you think about this moment in terms of the vulnerability of industry's cybersecurity networks? Obviously, as a defense company, this is very important to you to build the type of industry that so many countries need. Does this show some underlying fragility, an issue with the supply chain?
Well, of course, I mean, and we need to continue to work on this sort of zero trust approach of things, which is more about how you protect your information over time and how data-centric you become rather than to protect the fort of information, so to say. And this we discussed during the summit in DC last week, and there are solutions going in that directions. So you have to be able to interact at the same time as going into a cloud sort of based information setup. You have to work on the zero trust approach, which I think there are many companies going in that direction. But this is something we take really seriously and working diligently upon. So it's an important area going forward. But without the zero trust approach, I think it will be difficult.
Is there a concentration risk, the fact that this is all stemming just from one company?
I think so far I think it's more about the architecture and how the service-based approach will look like. To be agnostic, you have to be able to work with several different suppliers, of course, and you have to certify them, and they have to prove that they are as certified and reassured as we are on our system. So we haven't selected anyone yet. We're looking into this, so we will see what happens going forward.
Micael, obviously, if this hadn't have happened this morning, we would have started by talking about your earnings. Let's go there next, because you did have a very high order book. And I wonder where you see us in the defense spending cycle. Is it a moment that's about to ramp up, or are we somewhere near a peak?
I don't think we're near a peak at all. I think we're looking at growth in the next coming 10 years. Look at the need for the support to Ukraine, but also the replenishment of stock and capabilities in the European countries, which are now spending more and more on defense, and also increasing capabilities at the same time. So there will be, I think, lots of growth going forward, and we have just started the last 2 years just to take these steps. And I'm afraid we're not doing enough. I think there will be more has to be done. So this is more like a paradigm shift than anything else.
You know, the Sweden's defense minister only a few months ago said that this is a challenge that's being felt across Europe right now in terms of the lack of defense capabilities, that we have a defense industry base shaped for a peacetime situation. So what's necessary to change? What needs to happen to get things in the right place when there is a hot war in Europe happening right now?
Well, we as industries are investing a lot as we speak, of course, but these things as long-term commitments over sort of mandate periods for politicians are important to take the really big steps, to really build the new facilities, to invest in automation, to take the big investments. We're getting there, but I would say that to realize that this is really a paradigm shift rather than incrementally taking small steps, which is difficult for industry to refer to relate to when you take big investments decision, is probably the most important thing. Then, of course, if EU, for example, takes a big decision to together put lots of money in an initiatives like the European Defence Industrial Programme that has been discussed, like we did when the pandemic hit us, then, of course, if we put a lot of money there, then collaboration and big programs and alignment of requirements will happen. But these things must be implemented to make sort of taking the big steps. But long-term commitments is important to us from governments while we are taking risks as industry and investing.
I mean, there are certainly more prospects for disruption, and one of them might come from the U.S., not just European hot wars, but of the growing likelihood of a second term for former President Trump. And the language that him and his vice president have been using are certainly more isolationist, of not necessarily being willing, for example, to help Ukraine. If the U.S. does drop out as a supporter of Ukraine in supplying weapons to supplying defense systems, is Europe ready to pick up the slack?
I would say that Europe has to, that's the most important thing, that Europe has to realize that they have to take a bigger responsibility going forward, to invest more money into this. And I saw the summit last week, I attended it myself, to see that so many countries now within the alliance are now seeing 2% as a floor, and many are going further than that. And the support of Ukraine with a $40 billion support going forward the next year, and the coordination from NATO now supporting Ukraine. I think that's great initiatives. Meanwhile, I mean, Europe continue to step up, do it more quickly, and we have to sort of work with that independently of administration in the US. And the transatlantic link is really important, but we have to be more sovereign as a European continent when it comes to defense and deterrence and resilience.
Okay, Micael, thank you so much for joining us this morning. We appreciate it. Micael Johansson, SAAB Group CEO. Just want to give everyone an update on what we're hearing from CrowdStrike. The CEO commenting on a post on X saying that the issue has been identified, isolated, and a fix is being deployed. They are saying that this is not a security incident or a cyber attack. Again, many systems are down this morning. Airlines, banks, all experiencing some issues. But according to CrowdStrike, they're saying that an issue has been deployed to fix this, and that the issue has been identified and isolated. Okay, coming up, we're going to round out the week with earnings and Fed speak, and hopefully a solution for this so everyone can get back and traveling with no issues. This is Bloomberg Brief.
This is Bloomberg Brief. I'm Lizzie Burden, joining you for the last part of the programme from London. A look ahead at what's on the docket. We've got more earnings with American Express reporting just before the bell. Then we have the New York Fed President John Williams speaking at 10:30 a.m. Eastern, followed by Atlanta Fed President Raphael Bostic delivering his remarks at 1 p.m. A quick look on the markets as we head towards the weekend. We've been risk-off in the Asian and European sessions given this global tech outage, and it's been affecting the banks, the airlines, the London Stock Exchange. Look at those shares in the pre-market. CrowdStrike, Microsoft and United in the red as we head towards the Wall Street Open. You've had the CrowdStrike CEO saying it's not a cyber attack. The FAA saying it's being closely monitored. The IT systems at US airports have been impacted, of course. And in terms of the macro picture, the two-year Treasury yield is higher a basis point at 4.4% as we await that Fed speak. Euro dollar currently, as reflect on the ECB meeting yesterday at 108, Brent at $85 a barrel, and copper looking for a worst week since 2022 on the China news. That's it for Bloomberg Brief. Surveillance is up next.